It's about that time of day again. My name is Joseph. Wednesday evening, July the 11th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a strong spike lower, which appears to be ending in a range this evening. So my plan is to look for buyer failures using the two-try rule as sellers wait for more attractive prices up in the battle zone tomorrow morning. The S&P is range bound with a triangle pattern tonight, so I'm staying patient, looking to fade those breakouts, buying low, selling high, and avoiding the middle tomorrow morning. Nasdaq is also range bound and trading sideways as well tonight. That tells me again to buy low, sell high, avoid the middle on the NQ tomorrow. Gold is bearish and trying to finish a big measured move target tomorrow morning, and I got my eyes on selling opportunities using the high of a hidden channel tomorrow. And of course, we can't forget about the euro. The euro is bearish, but we're trading below the low of a range this evening, which tells me to look for buying opportunities using the two-try rule or selling opportunities using a spike in channel pattern tomorrow morning. Boy, I got a great newsletter in store for you guys and gals tonight. We had a ton of volatility to finish up this evening's session, so big moves today. Are we going to see continuation tomorrow? Are we going to see ranges tomorrow? Or could we see a big reversal tomorrow? I got my eyes on some reversals here on the charts tonight. Before we put the plan together, before we break this all down chart by chart, I want to remind you guys, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the video this evening. Also, if you have any questions about anything covered in tonight's video, please remember you can post those questions in the comments section below the video here on YouTube. And also, if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you want to stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. Upper left-hand corner, all I need is your name and your email address, and I'll shoot you an email every time I publish something new. You're hanging out on social media? If you're on StockTwits, Twitter, Facebook, LinkedIn throughout the day, I'm always posting exclusive content, charts, links, quotes, videos, all kinds of stuff you won't find anywhere else. Follow me on social, lower left-hand corner. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them ready on your computer for tomorrow, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow's session. And speaking of tomorrow's session, what are you waiting for? Grab that free pass, upper right-hand corner. If you're not a member here at School of Trade, right, I'd love to give you guys a free pass. Come out and join me as a guest in the trade room and get a deeper dive and actually see how, right, we apply these strategies on a real chart. Any questions? Hit me up on live support. I've always got time to answer your questions. You can hit me up for the questions on the right-hand side of the blog here on our website as well. All right, hope you guys are having a great day out there. What an amazing day it was today. We continue here pushing through the month of July. Like I mentioned last night on the newsletter, we are expecting there to be some quiet times during the month of July. The month of July is usually about as bad as it gets, right, when it comes to summertime trading. But what we saw today was exactly what we talked about last night. There will be some time slow here, right, during the month of July, but there will be a few hours each day where you get some really great opportunities. It all depends on if you are paying attention. So keep those eyes peeled tomorrow. Stay patient, right? But be realistic what's going on right now as we push the month of July. Speaking of the month of July, tomorrow, of course, is Thursday, July the 12th. We get some news tomorrow morning. We have the CPI and jobless claims tomorrow at 8:30 Eastern time, so keep your eyes open early tomorrow. We're going to be in the trade room tomorrow morning at 8 o'clock Eastern time, so we'll have a front row seat for that CPI number. Don't forget, the CPI number really is the headline number tomorrow morning. And remember, as we talked about last night, right? It's all about inflation this week, right? We saw the PPI number today. We got CPI tomorrow. We got import-export prices on Friday. Whenever we talk about inflation, right? Prices, the consumer prices, producer prices, manufacturer prices, right? All of that gets pushed down to the consumer, right? And of course, inflation affects the dollar, it affects gold, it affects euro. So keep an eye tomorrow morning on the gold and the euro, or any other currency, right, for that matter, right? My favorite, of course, is the euro. So CPI, the consumer prices, the jobless claims tomorrow morning, 8:30 Eastern time, that's going to be the big market-moving event. We also heard about new tariffs between the U.S. and China this afternoon. That really shook up the markets this afternoon as well, so we may see a little bit more of that tomorrow as well, right, as the markets kind of react to that news tomorrow as well. So we definitely are looking forward to a great Thursday trading session. We'll be in the trade room tomorrow morning, 8 o'clock Eastern time. I look forward to seeing you there with me. Let's jump into some charts here tonight. We got crude oil, S&P, Nasdaq, gold, and of course we can't forget about the mighty euro. Crude is bearish with a strong move lower this evening, but after a perfect selling opportunity off this hidden channel, the sellers haven't been able to retest the lows yet, which tells me to expect this market to go sideways in the short term. Expecting a short-term trading range tomorrow, my plan for tomorrow is to look for selling opportunities using the 2-try rule up in that battle zone. But if the market makes another strong move lower, I'm going to be looking for a spike in channel and selling opportunities off the high tomorrow morning. Now, of course, the first thing we see here on this chart tonight is this very strong, right, big, bold move lower. What is really interesting about this is that this move higher, right, came off of the 10:30 inventory report. Now, I'm not going to get into too much detail, right, because it really isn't necessary. But what was interesting about this scenario is that the actual number that came out this morning, right, was excessively lower. I think it was like a negative 12 million or 11 million barrels. I mean, it was an insane draw, right, on crude. Now, let's say that you owned a shoe store, right, and you hire someone to manage your inventory. And this afternoon, right, that manager, he or she comes to you and says, Joe, right, we have a lot less inventory, right, than we thought we did. What would that tell me to do as the shoe store owner, right? I probably have, right, a lack of supply, right, or a huge increase in demand. The bottom line is when we see inventories drop like they did on the inventory report, usually that results in prices jumping higher. Right? When inventories collapse, the only reason why that would be because we got too much demand, right, or not enough supply. Either way, prices are usually going to go higher. And you can see they did go higher there for a few moments, right? But then we keep hearing about the trade war that really snuffed that whole thing out. And that's what actually led to that big move down here late in the session, right? So basically the news completely got gobbled up. And again, this wasn't any small news event. This was the weekly inventory report, and it was a huge draw on inventories. Again, the inventories, right, are lower, right, than they were expecting. That should have had the price go higher. Instead, right, the market drops, right, on fears of this, escalating trade war, right? Whatever we believe is going to happen there, right? That's the reason why this market dropped. Now, this is important because whenever we see a big move down like this, if they can't hold this, we got that big DOE number today, that big draw on inventories. If they can't hold this could easily go right back, right, to where we came from. Now, it's way too early to call this a bull market. This is way too bearish to be a buyer. But I'm going to be keeping my eyes open because the way this market moved this afternoon, it just doesn't make much sense. We got a big draw on inventories, right? It didn't really apply much, right? We heard some rumors about pumping more at a side. This whole move stinks. It smells like something, right, kind of funny here right now. So I'm definitely keeping my eyes open, right, for that reversal tomorrow. But as of right now, all we do know is strong move down. Anytime we have a strong move in one direction, what do we expect? A two-legged pullback and a retest of that high. See, the problem right now is we have this big move down. And of course, I talked about this last night on the newsletter, right? Anytime we see a strong move like this, I'm going to connect those lows. I'm going to bring it up to that high, right? And you can see the sellers come in with a beautiful little trap high above that prior, right? That prior swing up inside that reversal line, a beautiful sell off the high of this hidden channel. Now, the big concern though is we sat there, right, for a few hours. This happened about 3 o'clock this afternoon, right? We sat there, right, for a couple hours into the close. So my initial reaction is all that strength going lower. The sellers had on a silver platter, right, the opportunity to sell this sucker and run back down to retest that low, and they haven't yet. So again, we're seeing a lot of these clues right now, right? The market collapses on what should have been bullish news. We see a strong move down that really very, very easy sell off that high, right? And we're not finishing that move down. So I'm thinking we should be going lower, right? There was so much momentum here. We should be going lower, and we're not. So I'm watching for one of two scenarios today. Well, really one of three scenarios in all reality, right? Price goes up, price goes down, and price goes sideways. Now, whenever we see a real big move in one day, you know, we're like 5% down today on the oil. Whenever we see a really big move on, let's say, a Wednesday, oftentimes Thursday goes sideways, right? So one scenario is going to be preparing for this to be a sideways range. The other scenario is going to be, right, what if price keeps going lower? And of course, right, the third scenario would be a reversal going back up, right, to where we came from after that, right, after that inventory report. So let's break this down. Right, we're looking at a definite bear market, no doubt about that, right? Way too bearish to call this, right, a bull market. I'm going to assume here we're going to go sideways on this, right? Big move down, right? Whether or not we retest that low or not, I'm expecting to see a sideways range here for a little bit in the overnight session. Now, knowing that, what I really want to do is I want to sell high. I want to sell up above that range. Right? And ultimately, there are two ways, right, I can trade a range. The first way to trade it, when we go up above the range, I want to go one try, pull back, two try, and then look to sell that two try failure. The moving average will usually look like this and then come down from there. Okay, so again, I want to see buyers try once above the high, make them try again, right? They're going to buy that pullback, right? Buyers will likely buy that pullback to the moving average. Once they fail, right, we're then looking for that failure now going back down into that range, right, to sell it back down. Now from there, if I can get the moving average to clear below this 70 area, then I can start looking for what I call the fake out, breakout, pullback pattern. And that means rather than using this as support now, right, I'll try to use it as resistance. Now pay close attention to how I draw this example. It's a strong move down. How strong? Strong enough to get the moving average to clear below that range low. Then I'm looking for a two-legged pullback. 1, 2. That two-legged pullback, what it really does is it gets the buyers thinking we're going to reverse back into that range. And then once I see those buyers failing, now I know I can sell right into their stops. That's why I like to have a two try, right? A two-legged move. So here we have one scenario here for tomorrow, a bear move into a trading range. I'm looking for the two try failure up above the high of that range, or the fake out, breakout, pullback down below the low of that range. Okay, now that's if we go sideways, right? What if we go lower here in the overnight session? Now, I'm expecting this to turn into a spike in channel. As we go lower, I'm not sure how much more this channel will hold up. Usually this channel is good for a sell off of that high, right? Like I mentioned earlier, right? The bears got that beautiful sell literally served to them on a silver platter. And the concern is why weren't they able to retest that low? Okay, that's where something kind of smells here, right? So it's all kind of adding up here. The bottom line though is if we see this thing continue going lower here now, my next option is going to be to connect these lows, right? Let's just say, for example, this channel's not here anymore, right? We go lower, we make a new lower low here now, right? I want to see it strong through that low, okay? I'm not looking for just a simple little wick bottom here, right, and then bounce back up. That's not what I'm looking for, right? I'm talking about a strong move through that low. We get that strong move to low, I'm going to connect those two lows and go looking for a spike and channel pattern. That spike and channel pattern will then tell me to look for selling opportunities right up off the high of that channel. And it will usually be what we call a buyer failure pattern, right? Which would be up, failure, back down, and go from there, right? It'd be a failure into strength, strength into pullback, right? Then a pullback pattern back down to retest that low. Okay, so scenario one is that range, right? Up to try failure, fake out, breakout, pull back through. Scenario two becomes a spike and channel, right? Spike and channel says sell, sell, sell off that high. And of course, scenario three, right, is going to be a reversal. Now, what does a reversal look like? How do we get a reversal, right? What I look for is what I call the 1, 2, 3 reversal, right? The 1, 2, 3 reversal. Now, just like the name suggests, there needs to be three legs to this. 1, 2, 3. The key word is strength. Okay, what I'm looking for is I want to see a strong move up. When we see a strong move higher, all that's going to do is give the sellers a chance to sell high. But that strong move higher is going to go above the moving average. So, of course, the buyers now will be given the opportunity to buy the pullback to the moving average. If they can hold that pullback on strength, we then know we have a reversal. But again, remember, if they fail here, now we're going to get a great selling opportunity, sell into their stops, into the moving average for a pullback going back down to retest that low, right? So buyer failure into seller pullback and a retest of that low. However, if those buyers, right, if they can hold this pullback and run on strength, now we can go out and look for a new channel, right? I'll connect these two highs, bring it down to that low. I'm going to look for a support level off of that prior swing and try to combine those, right, for a buying opportunity. And again, with a target going back up to retest those highs. And as you can see, I have a trend line coming down overhead, right? So we'll look to get through that trend line, use that trend line as support, right, as we try to go higher. So bears in control on crude oil, but again, something's fishy out there, right? The fact that we didn't retest that low, the fact this thing turned, right, on extremely bullish news this morning, something doesn't add up. Now, sometimes that's not much to worry about at all, right? We're going to focus on the chart right now. Most important thing, though, is where we go from here. Do we go sideways, selling high? Do we go lower, hidden, right, spike and channel? Or do we strength, pull back strength, right, and make a run going higher? Now, I know that many of you guys are here for the first time tonight, right? And I'm using a lot of terminology that you may not be familiar with. Spike and channel patterns, two-try rules, right? All of these different terms. And I'm talking about failure patterns, pullback patterns, strength patterns, right? I want to give you guys a deeper dive and a shortcut to learn more details about this entire trading strategy. And to do that, I'm going to go in the upper right-hand corner and give you guys a free trading course. So upper right-hand corner, grab that free trading course. That'll be a much deeper dive into everything I'm talking about here tonight. I don't have a lot of time here to spend really diving deep into this terminology just because, I got a bunch more to do here tonight in the newsletter. So pause the video, grab that free class. Not to worry, I'll be here when you come back. And of course, you'll get a lot more detail about the terminology, the patterns I'm using, and all the technical analysis tools, right, as well. So look forward to seeing you there on that video class, right, for our free trading class. All right, let's keep going. So now we know what the plan is for crude. Let's keep going here now. How about some S&P here for tomorrow? We got the Eminis up next, the S&P and the Nasdaq. Both of them are in quite similar situations here tonight. The S&P is range bound with a triangle pattern this evening, and that tells me to wait for a breakout and use the two-try rule to fade those breakouts, buying low, selling high, and avoiding the middle. Now, of course, we had this strong move down, right, from last night's newsletter. We talked about that last night. Thought for sure we had those buyers ready to go back up to retest the high. right? But everything kind of conked out. Everything kind of ran out of gas here today. Summertime trading in the afternoon was pretty quiet. We draw a trend line off those highs. We draw a trend line off those lows, right? That creates a triangle. Now you could also draw a range in here as well. It's a range, it's a triangle, right? However you want to call this market is trading sideways. Now whenever I have a triangle, right? Anytime I find myself with a triangle, the most important thing you want to remember is to get those edges, right? Look at the edges, right, at the highs and the lows of that triangle. I want to sell high and buy low, right? I want to buy up around those, down around those lows, right? I'm going to want to buy low, and I'm looking to sell high, right? So lots of opportunities in the triangle. The most important thing though is to avoid, right, the middle, right? Avoid that middle. We want to buy low, we want to sell high. Buy low, sell high, and again, focus on those edges, right? Focus on the swings. So when I go back to my chart right now, I can easily see, right? There's a swing, there's a swing, swing, right? Swing. You could say that one's also a swing right there as well. So that's where I'm really waiting for. I got my no trade zone right in the middle. I want to stay away from that middle, right, on the S&P, at least until we get some more proof here, right, of at least some sort of trend here tomorrow. And when you see a triangle, you really want to focus on those edges, right? Fade the breakouts and use what we call the 2-try rule, right? For example, it'll look very similar to this pattern right here. We go up, we pull back, we try again, we go back, right? That's the pattern. So let's say we go down, for example, right? We go lower. Price tries breaking out lower. Moving average comes down. What's going to happen? Well, eventually sellers are going to stop selling down there and let it pull back to the moving average, right? As the sellers now try to sell that pullback, remember, the market's not trending, right? It's a range. And we know that the odds are going to be in favor of the buyers here as those sellers fail. So as the market goes lower, I look for 1 try. I look for 2 tries. Once that 2 try fails, I'm looking for that buy going back up into that range. The same thing is true to the upside. We go up, 1 try, right? That strong breakout brings the moving average over. We then look for the buyers to try again, 2nd try. Now we know where the stops are, right? Knowing where the stops are for these buyers, I can now sell into their stops, or I can wait for now the pullback, right, up to that moving average and sell back down again, right? So again, 2-try rule, fade the breakouts, buy low, sell high, and again, avoid the middle, okay? Now, how do we break out of this range? What would a breakout look like? Well, remember the 1, 2, 3 reversal? Well, that 1, 2, 3 reversal could also be used for a breakout. So instead of a 1, 2, 3 reversal, we can call it a 1, 2, 3 breakout, right? Pretty simple. What's it look like? 1, 2, 3 breakout. Remember, we go 1 try, 2 try. If they fail, we're selling this back into that range, right? 1 try, 2 try. If they fail, right, we're buying back into that range. So if the 2-try rule is successful, 1 try, 2 try, right? And we blow out, right? Now we have a breakout. Find that new channel, mark up that low, look to buy the low of that channel. Where's my target? Target is back up to retest that high. If we go lower, 1 try, 2 try, right? Explosive 2 try. Find that new channel, sell the high of that channel. Where's my target? I've got a beautiful measured move down here off of that big, right, move down, right? So that's my objective from there. Now, it's possible tomorrow that we could also see both of these scenarios, right? We could see, for example, we could see a 1, 2, 3 breakout, a sell off the high of that channel, only then to see the market rally going back up into that range late in the session tomorrow, right? So keep your eyes open for that strong break down to the measured move, and then watch it consolidate tomorrow afternoon, similar to what it did this afternoon. Again, summertime trading, don't be surprised. Okay, and then look for that reversal going back up into that range, right? So look for that buy as the momentum turns back in the direction of the bulls. So we're looking at a trading range, a triangle. Stay away from the middle. Fade those breakouts using the 2-try rule here. Now, the Nasdaq is very similar to the S&P tonight. Nasdaq is range bound with a triangle pattern this evening, and that tells me to focus on failures using the 2-try rule at the highs and lows of the range tomorrow morning. Now, of course, looking at this, right, very similar here to the S&P, draw a trend line down, right? Draw a trend line up, moving average nice and flat here, right? To most people, this would look like a market that you wouldn't want to waste your time on. But I'm telling you, these triangles, don't be sleeping around, right? These or sleeping through these triangles, right? Because these definitely have great potential. Mark the swings, right? Mark those swings. You want to see this market get out, right? Get down, right, below that range. 1 try, 2 try, failure, back into that range. Remember, and when it comes to a range breakout, the bigger the better, right? As long as we don't see that strength pullback strength, right? As long as we go 1, 2, right? I'm fine with that. We'll grab that, buy into those stops. Moving average comes over. Buyers now buy the pullback, right? And we're going back into that range, right? You're buying the seller failure and you're buying, right, that bull pullback. Again, I know I'm covering a lot right now, a lot of different terminology, right? So if you want that deeper dive, right, if you want to learn more about all the patterns, grab that free trading course in the upper right-hand corner. There's an information icon up there, right? And you'll see the ability to register for our free trial, right, and our free trading class. And that way you can learn more, right, about this strategy. Okay, again, as the market goes higher here, 1 try, 2 try, failure, strength, pull back, back down in, right? Stay away from that middle. Stay away from that middle. Get it up, 2 try, back in. Get it down, 1 try, 2 try, back up in. How do we break out? Simple. 1, 2, 3, breakout, right? 1, 2, 3. Remember, that move's got to be strong, right? That second leg's got to be really strong. That's what gives it away. Find that new channel. Don't chase after the move higher. Wait to buy that pullback, right, and buy off of that low. Where's my target? Up at that big measured move. Big measured move lines up right around that prior high. That's my objective, right, for those bears. Sorry, for the bulls, right? How about the bears? The bears are trying to go all the way back down to retest that low. Unfinished business. Strength, pullback, strength. Don't chase after it, right? Sell high to finish off that move going lower. And then if they can really run this sucker lower here, we also have potential for a larger measured move, right? Which could also come into play tomorrow if we can get through that 7204 area. 7204 is a big area, right? You've got the 7335 area. Those are the extremes, right, of the last few days. And those are going to be our price targets for buyers and sellers. Fade those breakouts, right? 2-try rule, avoid the middle. You know the deal. Let's keep going. How about some gold here tonight? Gold is bearish and racing towards the prior week low this evening, telling me to focus on selling opportunities at overhead resistance levels, and I have my eyes on the highs of this hidden channel tomorrow morning. Now, of course, I'm going to zoom out a little bit further on this gold chart just to make sure you see the big picture here, right? Because you can definitely see here, right? We get this big pendulum swing, right? Come up the high of that range. We were expecting to see a lot more bullishness today out of gold, but it never happened, right? Straight line down. That straight line down tells me we've got to give them respect to go one more try, and they could never, right? They simply could never dig themselves out of that hole. I got a big measured move coming down, right? That big measured move is going to be our target here. It's right along that prior week low at 1238.8. I have to assume that 38.8 is going to be the objective for those sellers. If for some reason the sellers drop the ball on this, we've got that trading range, which will definitely be a magnet for those buyers tomorrow. In the meantime, though, we know the market is bearish. Let's dig in here. For the sell side here, we have this falling resistance trend line, as you can see. Right, that falling resistance trend line, we talked about this last night, right? Anytime we have 1, 2, 3, anytime you've got 3 or more tests of a trend line, right, I call that my key trend line, right? That's kind of the anchor for the bears, right? So the closer we are to that trend line, the better our results are going to be tomorrow, right? Think of it that way. Think of it as the kind of the anchor there for, right, for the bears. The farther away from that trend line we are, right, the more you can consider it to be selling low, right? We always want to sell high up at a level of resistance. So I got my key trend line. I'm also drawing in, if I zoom a little bit closer here now, I'm also drawing in this trend line at the lows, connecting that trend line up to the high, and you can see that also comes into play too. What we call a qualified channel, right? A qualified channel is the best of the best rotation. 1, 2, 3, 4. That's a qualified channel, right? A qualified channel tells me, right, that we should expect to see selling opportunities back at the high, if not at the high, up above the high, back down to retest the low. So we already know where we want to be selling, right? We're bearish. We know we want to be a seller up at levels of resistance. Don't forget the reversal line, right? Prior level of support, new level of resistance, right? So all of this, right? All of this really comes together nicely here for the bears up around that 1247, 1248 area. Now all we need is to find a pattern. And basically in this scenario, there's really no question about direction right now. The real question is, what do we get in the short term? Does price go higher? Does it go lower? Does it go sideways? Let's talk that through. So first of all, if price goes higher, I'm looking for a move up into resistance. Now that move higher will go back above the moving average. Okay, and look for examples like this, right? Whenever we go above the moving average in a bear market, what happens a lot of times is we'll pull back to the moving average. The buyers will now try to buy to reverse that trend. And if they're successful with strong break higher, this will be a reversal. Okay, but not so fast though, right? The odds are not on the side of the buyers yet, which means at that point now, once we see those buyers, right, trying to buy the pullback, once those buyers show us evidence they're trying to buy that pullback, now we know where their stops are. Knowing where their stops are, right? If you're a buyer, what happens if you get stopped out? You become a seller, right? Buyers become sellers when they get stopped out. So what a great way to sell. Sell the high of a channel, but don't just sell, right? Sell when the buyers are also jumping on board. That creates, right, this vacuum now as stops get run, right? Exits get triggered and the price will run lower. Now, as the market runs lower, don't chase that move lower. Remember, we always want to try to sell at resistance. So wait now for the pullback and look to sell the pullback. Okay, so here we have a one try, two try, a buyer failure pattern. Okay, buyer failure into seller strength. Okay, don't chase, bear pullback, right, up at resistance. And who knows, maybe it comes back to that trend line. Maybe it, we'll see where that pullback comes. But that's the plan if price goes higher. Okay, now what if price goes lower, right? What if price just keeps rolling lower here? If we keep going lower here, the writing is on the wall. We know where they're headed. They're headed to that prior week low. If it keeps going lower, we'll call this a spike in channel. Remember, this is a pretty strong move down, right? You could easily call this a spike. So if we just roll over and keep making lower lows here, right, and we're not, in other words, we're not getting that move up to the high of that range, now what I'm going to do is mark up those lows, mark up that high, and whenever we have a spike in channel, we talked about this on Monday night, right, I'm going to mark up that high, mark up the swings, right, and look for what? And look for that nice jump up so I can sell it back down from there. Looking for buyer failure patterns, looking for trap patterns, right, and then of course looking for pullbacks on the way back down to retest that low. Okay, whatever you do, don't sell as the market's going lower, right? I realize it's intuitive, right? It's kind of natural to want to sell a market that's dropping. The fear of missing out, our hands they just gravitate towards the sell button. But we have to resist the temptation of selling right at the low. We gotta wait and see if we can't sell high. That way we get a lot more profit potential in the trade. And when there's more profit to be earned, right, there'll be a lot more sellers waiting. Now remember too, nice big strong move. Anytime we see a strong move in one direction on, say, a Wednesday, oftentimes Thursday ends up going sideways. Now remember, anytime we have double bottoms in a bear market, right? So we're going lower, We pull back, we run lower again, but we bounce off of that low, right? If we see double bottoms here in the short term, right? Double bottom here. And remember, these double bottoms do not need to be perfect. Okay, there's really very, very few, right? It's very rare you get a straight double bottom, like straight tick for tick double bottom, right? So we'll look at that, right? If it runs lower, then we obviously know that's not a double bottom, right? But if it goes up, pulls back, goes down, comes up, it doesn't matter to me if it's exactly a double bottom or not, right? But that will give me enough proof now that we're bearish, but for whatever reason, the sellers just don't see value selling this low. So what do? We mark up that high. This becomes a trading range. Now, just like we talked about on oil, right? If we have a bear market that then goes sideways inside of a range, what do? We focus on selling up above the high of that range. How do we do it? 1 try, 2 try, buyer failure, right? We wait for that 1 try, that 2 try, buyer failure, right back down again, right? So if we do see that double bottom, look to sell up above the high of that range using, right, that 2 try and that buyer failure. And again, if you want to learn more about 2 try rule, right, failure patterns, trap patterns, grab that free trading course in the upper right hand corner. Last but not least, what's a reversal look like? The 1, 2, 3 reversal. What does it look like? You got it. Strength, pull back where? Pull back to the moving average. It's got to test that moving average. Okay, got to test that moving average. Okay, now good example, right? Good example back here, right? For example here we had a strong move up. The buyers buy the pullback, but do they explode? No. And what happens? It collapses back down, right? Strong move up. Buyers buy the pullback. Does it explode? No. What happens? Collapses back down. So remember, we go up. I don't care how strong that first leg up is. If those buyers don't explode off of that high, they need explosion, right? That explosive price action is telling us one thing, and that is the sellers are not defending this market anymore. Okay, that's why you need the explosive movement higher. You've got to give us proof that momentum now has shifted, but more importantly, that explosive price action going higher, what it really tells me is the sellers in the market have now basically ruled this thing dead, right? They're done. They're getting out of their short positions. They're buying their way out, right? And the market will explode higher because of it. So knowing that now, I can connect those 2 highs down to that low, and I'll look for buying opportunities now, right, off of that low. The target, right, for these buyers is pretty easy. Remember, we got that big trading range back in here, right, 1257 area, right? That'll be your target for the buyers. Okay, looking to sell up at resistance here on gold, so stay patient for it, right? Stay patient for it. Last but not least, how about some euro? Boy, I'm loving on that euro right now. Euro's been some great price action lately. Euro is bearish and trading below the low of a trading range this evening. That tells me to look for buying opportunities going back up into that range, or I have to wait for proof of a successful breakout with a spike in channel, right, tomorrow morning. Now, isn't this a great example of what I just described on gold, right? Strong move down, we pull back, we go back to retest the low, and what happens? We bounce. That's your double bottom right there. That's that double bottom scenario I was talking about. No, it's not perfect. It's not a tick for tick exact double bottom. But guys and gals, I hate to break this to you, but textbook examples only happen in textbooks. They rarely happen on real charts in real time. So just be aware of that, right? Not looking for perfect, we're looking for profit. Okay, we're not looking for perfect, we want to see profit. So that's close enough for me for double bottom. Once we see that double bottom, then what happens? Well, then we mark up this high right here. That becomes the range. And look what happens. Right back to the high. 1 try, 2 try, failure, strength, pullback right there. There's a great example on the euro of exactly what I described on crude and what we just talked about, right, on the gold. Really any market for that matter, right? We just seen some examples tonight, right, on our favorite markets. So that's a great example now of a range. And again, you've got to go out and actually listen to the story, right? You've got to kind of have that mindset. If you just look at this and go, whoa, that's a big, strong move down, you're missing a lot of the critical information. The critical information is, yes, this is a strong move down, but context, right? Paint the picture for me. Yes, it's a strong move down, but look where it is. it's below the low of a range. Now, what do we do with a range, right? Well, we buy low, we sell high, and we what? And we don't fiddle with the middle, right? We avoid the middle, right? Don't fiddle with the middle, as Mama says, right? So sell high, buy low, and avoid the middle. Now, is there a directional bias in this range? What do you think? Yes, there is, right? It's a bear market going into that range. So in all reality, being a seller is the most reliable way to trade this market, right? Okay, right? Because a bear bias going into that range. That's why this is such a beautiful sell off that high, right? Goes up, one try, two try, fails, right? Back down again. Okay, now, so buy low, sell high, avoid the middle. So how do I buy low down here? It's a bear market, right? How do I buy low? Well, if it was a balanced market, I'd be looking for the one try, two try, failure, and back up. But again, we're bearish, so I can't exactly apply the same pattern we used at the top to the bottom. I can, but the problem is a lot of times these do this. They'll trap and then run. And you'll be basically left holding the bag up there with an entry long, right? And you're basically buying, right, into all of these sell orders. You're filling the orders for the opposite side of the market, right? So I don't want to sell that right now. That's not very reliable either. What I want to do is I want to let these sellers fail. Then, once I see that momentum start to run higher, now I know I can buy the pullback. And my goal is to make sure I'm buying as close to the low of that range as possible, right? So what happens oftentimes is it'll run up and just keep going. If that happens, well, missed it, right? I don't want to chase after it. I want to wait for the pullback. What usually happens, though, is we'll usually jump up, moving average comes over, and oftentimes it'll pull back down to the low of that range, and then we can be a buyer going up from there. Okay, so again, it's going to be the two-try rule. Instead of taking the two-try seller failure for the move higher, I'm looking for that two-try rule to be successful now, right, for the bulls, and then buy the pullback on the way back up to the high of that range. Once we then get back to the high of the range, then it's one try, two try, failure, strength, pullback, right? It's identical to this pattern, right? Back off those highs. Okay, so that's the plan, right? At the high, again, one try, two try. I can't trust the failure, but I can trust the pullback going back up in, right? We go up, one try, two try. I can trust the failure and the pullback, right? Going back into that range. Now, I can't deny the fact, though, there's a very strong move down here. It's a pretty strong move, right? And what do we always talk about? Anytime we see a strong move in one direction, we usually see a two-legged pullback, right, and another leg lower. So what am I looking for here right now to feel confident to start selling this market short? Okay, as you can see here, I've got a measured move right below us right now, right? It's a pretty obvious measured move there too. So I have to assume this whole area here, forget this channel here for a second, right? I have to assume, though, this area here, I've got to see some more, right? I've got to see a lot more proof before I can start trying to sell down here. What would that proof look like? Well, remember the 1, 2, 3 breakout. Here's 1, 2, and then 3. So if we see some strength going through this low, we'll call this a new spike in channel, just like we talked about on gold. I'm going to mark up those two lows, mark up that high, and we'll look for sells up off that high. Remember, though, guys, right, I'm not talking about this. One try, two try, like that, okay? That's not enough. It needs to be one, pull back to the moving average, bam, right? This needs to be explosive going lower. It has to be explosive enough to shake off all these range traders, okay? Got to be explosive. Once we see the explosiveness, then we can go out. And I know it's tough, right? Because we're all going to want to sell that move lower, okay? You can sell it if you want, but it's not a reliable trade because the range hasn't broken down yet. See, what happens is when you have a trading range, imagine that trading range is basically like one big magnet. The reason why ranges exist is because the market's balanced. Now, unless we get some sort of news that comes out or political snafu, whatever, something has to happen. Some third-party influence, some outside influence has to come in, right, and shake this thing out. Well, just like any other market, just like any other magnet, right, every magnet has kind of that magnetic field. You know what I mean? You get a piece of metal, close enough to a magnet, and the magnet just draws it right in. Right? That magnetic field, if I take the size of this range, right? Size of this range, copy and paste it up, copy and paste it down, right? That's an easy visual as far as how far this market needs to go through for me to start believing in this breakout. Because I've seen so many times where we go one try, two try, we fumble around, right, this range expansion level, and then bam, right back into that range. So be very, very careful trying to sell down here. It's not a great spot to be selling. So one try, two try, bam, I got to see explosiveness, right, and then we can start selling as we go down from there. All right, guys? But again, right now, one try, two try, failure, strength, pull back in. One try, two try, failure, strength, pull back in. Stay away from that middle, sell high, buy low, and look for the breakout, right? That 1, 2, 3 breakout. Boy, that time flies when you're having fun. 45 minutes into this video. I want to thank you so much for sticking around me tonight. I know you guys are busy people. I know we got a bunch of football on television here right now. Well, that was a nail biter there between Croatia and England this afternoon, wasn't it? What an amazing match that was. The bottom line, though, is thank you so much for sticking around me tonight. It's always great to have the opportunity to teach and trade with you guys every evening on our nightly newsletter. Want to do more? If you want to learn more, come out and join me, right? We have our beginner, our intermediate, and our advanced classes here at School of Trade. If you're a beginner, intermediate, or maybe you're a grizzled veteran just trying to add a few more tools to your toolbox, I've got a great class schedule here for you guys, beginner, intermediate, and advanced classes here at School of Trade. I got a free trial for you. Right? You're going to love my free trial. As part of that free trial, I'll shoot you an invite to come join the trade room so you can learn more about how we do things here at School of Trade. I'll also give you a free trading class as part of that free trial. That way you can get the nuts and bolts of this strategy, right, to improve your own trading and so you know what you're doing with me every day as a client in our trade room. Don't forget, you can always call the office right next to my ugly mug right there. Call the toll-free number or use live support or drop the questions in the comments section below the YouTube video. Guys and gals, always a pleasure. Now, tomorrow morning, 8 o'clock Eastern time in our trade room, or maybe tomorrow night, same time, same place, tomorrow evening on our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.